Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis for Monday, September 19th through Friday, September 23rd, 2011 is sponsored by Realtik. Alright, guys, let's get right into the mix and start the action here. Markets, again, having a very solid up week, 5 straight up days, and the key to last week was pure and simple Monday. Last Monday, the markets opened below a pivotal level, and by the close, they recaptured the level. That signaled to me the long positions needed to be accumulated right there on that Friday afternoon. And again, I'm going to show it to you on the daily chart. Let's take a look right now. See this white trend line sloping up, and we can get rid of this line right here. We don't need that. This sloping line was the key. That was everything you needed to know about this week and to give you the direction of this market. And that's what I utilized to, again, give my members at InTheMoneyStocks.com and the Research Center in the Intraday Stock Chat a long signal to go long some key stocks. And notice how this is the chart here. It opens right here on Monday. This is where we opened on Monday. The market surged by the end of the day. This was a late day buy program that hit. We closed above the white line. As long as you hold this white line, the markets can be looked at as a neutral to positive possibility. And sure enough, look at the rest of the week. It closes back above the white line. Tuesday, Wednesday, Thursday, Friday, all up. And again, isn't it amazing how the charts work like this? You just read the charts will tell you everything. And by the way, folks, you can come take a free trial, 7-day free trial to the Research Center or the Intraday Stock Chat by going to InTheMoneyStocks.com and signing up. All right, so again, very nice week. If you look at on the daily chart, you can see it right here. And also, if you go to your intraday, I zoomed out so you can see this is the 12th on Monday, Tuesday, Wednesday, Thursday, and Friday. Friday ending just slightly higher. An actual dividend was paid out on Friday as well, so it actually on the charts doesn't look like it closed higher, but it actually did close 72 cents higher on the SPY. And that's what we're looking at here, folks. For those of you that may not know, this is the chart of the SPY, which is the S&P 500 tracking ETF. All right, zooming out. Let's go out because we need to discuss some levels here. See this white trend line? That's a pivot resistance level. The level on that chart, to be exact, folks, is right around the 121.75 level. All right, so 121.75 is right around that point of interest. That's what you're following, and that's what you want to pay attention to. All right, and just to go over a couple other levels here, if we get through this white line next week, your next resistance is going to be right around 2250, 122.50 on the SPY. Then you're going to have another key resistance at approximately 123, and ultimately 123.50. 123.50 is probably the upside of this market's extent. I don't even know if we're going to get there, folks. To be honest, I'm just going to lay it out to you exactly the way I see it right now. We called for an upswing after Monday's reversal. That was a key reversal. We made money on the upside. Essentially, I have closed out most of my large cap and ETF long positions as of Friday. I'm still holding half a position of TBT in the money with a break-even stop, but that's all at this point. Why? Because the markets are short-term extended. Last week was options expiration, so you expected a possible up move as well, as we had been talking, and sure enough, that's exactly what we got. Options X is over. We're now getting into a very hairy situation next week. Why? Because European countries are meeting in regards to this bailout possibility, and people are arguing. They're going back and forth. That looks like it could be a mess. In addition, the Federal Reserve, folks, is meeting Tuesday and Wednesday to discuss the policy statement released on Wednesday. Wednesday's release of that policy statement will be ginormous for the markets because the markets are anticipating QE3, some sort of quantitative easing number 3. If the Federal Reserve Chief Ben Bernanke disappoints, markets could literally collapse sharply. If he gives it to him, maybe we go a little bit higher. Upside, to be honest, I think is only to 123.50, which is only about a dollar, make that $2 away right now on the SPY, which equates to about 20 points on the S&P 500. So again, you're very, very close right now, in my opinion, to a short-term top. I have not, and I repeat, I have not accumulated any shorts yet, but I may start accumulating early next week, depending on what I see from the charts. And again, if you want the exact live calls, you take the free trial of the Research Center. Their swing trade live alerts given out. Research Center, again, gives you videos every night, live broadcasts a couple times a week. We have hot charts and alerts with pro live trades, swing trades being taken constantly throughout the days and over the course of the week. And there's more included in there, daily market reports with major levels given and so forth. So again, just be aware, folks, that that is what we're seeing right now, and that's the general synopsis of what I'm seeing next week, is that I think next week, especially by the second half of next week, things could get a little bit messy in the markets. I'm going to be very curious to see how this market opens up on Monday and Tuesday, and then Wednesday when we get the Fed news out, that's when the fireworks should begin. So again, I'm going to slowly watch the charts. When the charts tell me to go short, I'm going to look for the short. Now, if we go to the 60-minute chart, one thing I think was very interesting, notice how you had this head and shoulder pattern, beautiful head and shoulder pattern. It gets below and then gets back above. Whenever a pattern like this fails like this and gets back above, you have usually a big move in the opposite direction. Head and shoulder pattern is bearish. Notice how it gets below. That should trigger it, and it fails to the opposite side. Then you get a big move to the upside, and that's exactly what happened here. Look at the ginormous move. And again, Monday it failed, and look at the move the rest of the week, just straight up. So again, notice also how this pivot high going back to the, I guess that would be the 8th of, 7th, 8th of September here, we get above that towards the end of the week, and you actually start to consolidate. So that's what tells me there may be just a little bit more upside in this market before a fall, possibly to this pivot high. But again, I think this is probably the extent of the pivot. But again, that consolidation above this trend line, above this pivot high, is what's giving that away to me. You have a 20 moving average sloping up underneath as well. So again, if we start to move up a little higher, I will start to accumulate some shorts. If you want those exact live calls on the short swing trading side of this market, and I'll probably be most likely picking up some QID and going long QID and SDS and stuff like that. But then you need to join the free trial of the intraday stock chat or the research center, or take both. You can take both. That's fine with me as well. All right. Let's go to the daily chart. Daily chart is pretty obvious here. Long-term bear flag. See this downward move, choppy consolidation. Notice how you're coming up to the 50 moving average. I think that's, again, coinciding with the 123 to 123.50 level, which is also the pivot top right here. So you can see this area right here is where you're really going to get into resistance. You have a pivot high and a 50 moving average. That's, again, where I think the market most likely will tag in the next couple days, next week. Again, if it even gets that high, but it should probably approach that area into the Fed as people continue to buy the market in hopes of QE3. Now, if Bernanke disappoints, this thing's going down and going down fast. So be aware of that. All right, again, long-term bear flag. We can't miss that because that's a major thing here. And let me just erase some of these trend lines right here. Some of the trend lines need to be erased. Let me just erase that. And again, one thing I just think is very, very fascinating, if you connect these lines right here, the pivot highs and the pivot lows, you actually have parallel lines. See the symmetry of the market here? Parallel. Connect the highs, connect the lows, parallel lines. That tells you that, again, we're trading in a sideways to upward motion off of this down move, which ultimately will head lower. The question is, and again, this is the big question that's going to make you millions or make you no money or lose money, is a matter of when does it happen. People that are right on it, on the trigger, and get the exact entry point, like we're going to nail here in the Research Center and Intraday Stock Chat, we're going to make the most money. Everyone else will either lose or make less. Just that simple. All right, now I'm going to be on top of this move. My guess, sometime next week, we'll be starting to accumulate those shorts, just depending on what the charts tell me. I will be reading the charts, teaching our proprietary analysis, which, by the way, we give out to the average people as members, which are amazing traders now since we've trained them, and swing traders and so forth. And we also give it to hedge funds that pay us the appropriate amounts. So, I mean, we don't hold anything back. You're a hedge fund, you want the info, we're going to give it to you. You're an individual investor, you sign up for the Research Center, we're going to give it to you. We believe in full and fair disclosure of everything. We're not going to hold anything back. Most, people like Goldman Sachs, these big institutions, they give special treatment. No special treatment here. Everyone gets it. All right, equal opportunity, right? Equal opportunity. All right, the only difference is obviously hedge funds have more money, so they make more money, but that's just the, percentage-wise, you'll make the same. All right, in any case, that's the chart of the daily chart. Let's go here and look at a couple of the charts. I thought the daily chart of the dollar was very fascinating. This is a chart of the UUP, which is the dollar index ETF, and we actually had a great call last week. See how you got above the 200? Amateurs would think this was a breakout. They go long the dollar. I noticed that on Tuesday right here, in fact, this is Monday. So Friday we get above. Monday we push up, you reverse, and you don't confirm above the level. Confirming above a key level of a breakout is very, very important to understanding when a true breakout has occurred. That's a proprietary technique we've developed here at InTheMoneyStocks. There was no confirmation here, therefore reversal was most likely. And again, I went bearish here on Monday on the dollar, and sure enough, look at the dollar trade down the rest of the week, and the market's obviously rallied. Interesting to see the dollar pop up a little on Friday, but again, markets were late enough in volume on a Friday going into the weekend that they held up and gained a little bit. All right, but nonetheless, that's very good. And also one thing I said this would be your target of the dollar pullback, and sure enough, look at where it goes. Why would that be a target? Because it's major support, right? Right at gap fill. So nice pullback right there, and then you get a small bounce on Friday. The gold chart, wacky chart, but one thing I also mentioned, you were consolidating right below the 20 moving average, therefore a downside was likely, and sure enough, Thursday you had a nice fall. Friday you bounced back up a little bit as well. I think a little bit of fear creeped into the market on Friday. Why? Well, essentially we've seen Fridays mostly be down. So fear kind of came in because people worry about what's going to happen over the weekend. Remember, Sunday night Europe opens. The U.S. has still been closed for a couple days, and I think that makes people very nervous and more likely to take profits on their positions. And again, you can see the dollar inching up, and obviously here the gold chart bouncing a little bit on worries over the weekend. If we go to the USO chart, USO went right into my target range. I still think you have a chance of touching the 50, but it's really kissed it almost at this point. I do think the USO chart, which is the oil chart, is going to fall. This is what you're watching, guys. This is everything right now. Just connect these lows right here. And again, we can even connect these pivot, this area right down here. Notice how this is trending up. You have a little pivot top right here, little triangular position. This breaks to the downside. This is going to go very quickly to double bottom somewhere down here. So watch this, and this will coincide with the next fall in the markets. It's funny because the media and the analysts on TV have been almost always wrong on every single day move in the markets. We've always been right here over the last multi-month period, and most of them are getting more bullish now. We're actually getting a little bit more bearish, thinking the markets will eventually break down here late next week, sometime next week most likely, as we have some turn signals coming up and so forth. But again, if you want that accurate information, you've got to take the free trial of the Research Center, take the free trial of the chat room, start profiting with the pros, guys. We're here. We're going to teach you our proprietary techniques. We're going to give you live trades, swing trades, and day trades, depending on what service you sign up for. It's here for the taking. Again, if it's free, it's for me, right? There's a 7-day free trial. Try it out. Again, our general synopsis of those who stay with us after our free trial is the best in the business out there because we're that good. All right, so again, check us out. We look forward to having you with us. It should be a very, very volatile week, so be ready, folks. This is going to be wild. Hold on to your hats. Let's make some more money next week. Take care.